What up, YouTube? Welcome back to Fondue Biz. Today we're going to be analyzing Hyrecar income statement. I will be going through the income statement, balance sheet, cash flow, and other items related to Hyrecar. But for now, let's look at Hyrecar. How's their income statement doing? How is the growth rate of the company? And what is the highlighted performance? So I've gone here and taken a couple of high notes. So Hire, ticker symbol HYRE, this financial statement analysis, specifically income statement. They're located in Los Angeles, California. The industry, passenger transportation. Their data in this income statement is 2016 to 2020. Hyrecar is a peer-to-peer car-sharing marketplace that allows car owners to rent their cars to ride-sharing services. The platform allows owners and drivers to enroll, facilitate matching, long-term activity, and background checks. These are the leaders in the company, and these are the analysts. One of the biggest highlight for the leadership is Scott. He's leaving, being replaced by Bach, and is going to be very interesting. I think Bach's got great experience, and he's going to be a great addition to Hyrecar. Great experience with Twitch, when he's had great experience with growing Twitch when it was really scaling, and understands on how to scale small companies, growing companies, as well as here we have analysts. There are 4 analysts that are looking at Hyrecar. Let's go ahead into the sales and revenue for the company. As you can look, year over year from 2016 to 2020, their revenue has grown dramatically. Hyrecar about 1,500, and year over year 59%. They've gone from 15 to about 25 million. That is just about $10 million growth, right? So strong revenue growth over the past year, with almost 60% year-over-year growth. This is good to see, especially for a young company that is trying to take a big portion of the market. It's good to see that they're reaching customers. Now we go to the bottom, you see their gross income, gross profit growth has done well. Because Hyrecar is a tech company, they don't have a lot of overhead costs. Most of their expenses is going to be in the SG&A. This company doesn't have brick and mortar stores that they have to set up to rent out any car. This is just like kind of like an Airbnb, but you don't need as much money to enter the market. So because of that, they're going to have a lot of customers entering into this market, and they're going to have a lower cost because they're not going to have brick and mortar stores for every rental that occurs. Let's keep going. And the SG&A has jumped a lot for the past year. Biggest reason for the other category expense includes stock-based comp, business scaling, legal fees, sales and marketing, totaling 8.1 million in 2020. For the company to continue to grow, we will see this expense to continue growing as well. As the company grows, they will hire more employees, continue to increase research and advertisement expenses. Because they're a young company, because they're not expected to really have a positive net income, they will continue to lose money, have higher total operating expense, and therefore it will take up a lot of their gross income, and it will result in losses in EBITDA, income before interest, tax, depreciation, and amortization. Hyrecar is going to have a negative income before tax just because this company is young. They don't really, most of the money they make is going right into the business and marketing and research development. And if we look at the company's income from continuing operation here, we are seeing negative. Income from continuing operation has declined consistently for the past 5 years. Um, this major decline is mainly due to the company's growing expense. The added research, advertising, stock-based comp has lowered the ICO largely. As the company grows, we may see other SG&A expenses grow, but we may not know the speed of revenue growth. With $3,000 car, this company has been able to make $25 million. What would the revenue look like with 9,000 or 9,000 cars, right? Especially if they partner up with Ameritrade, this can be really good for them. So Hyrecar continues to lose money at the bottom line. A new company that just went public and is trying to get a bigger share of the market often does not have money at net income. Often, most of the company's revenue goes towards the company's growth in expenses, in operating and marketing and stuff like that. If Hyrecar is able to partner with Ameridrive Holding Inc., it can add up to 6,000 cars to the platform, and that will bring Hyrecar vehicles on the platform to 9,000 about. And if they are making 25 million with 3,000, what would it look like with $6,000 more cars? So with 6,000 more cars, definitely revenue is going to increase, and the company is going to definitely grow. That's for the income statement. I want to quickly look at the sales revenue. Overall revenue growth rate has slowed down over the past 5 years. We would like to see revenue stabilize around 50 to 40% because they are a young growing company. With the additional new cars they would add with Ameritrade, I think not Ameritrade, with Ameridrive Holding, I think Hyrecar could definitely see a pop in revenue for 2022 and 2022. SG&A expense, as you can see, gross income growth rate year over year has slowed down, and this slowing down is just true across the board. The growth rate slows down as you get the bigger share of the market, and you have to pay more and more advertising expense to reach even more people. So right here we got research and development, research and development, and other expenses as well. SG&A, other SG&A growths are continue to decrease here year over year. Research and development has growth rate decreased by 72%, and so the operating income, EBITDA before any depreciation amortization, has also slowed down. So yeah, I don't want to say the same thing over and over again. The company is just slowing down growth. SG&A expense rate has slowed down over the past 5 years. I believe this decline will taper off around 25%, especially with the new partnership and additional channel growth. And let's keep on going. Losses from ICO, income from continuing operation, has slowed down for the past 5 years. This loss could potentially remain around 30 to 20% for the next few years. For reasons related to growing expenses, I can see more expense incurred in non-operating expenses. Net income loss has declined from 2016 to 2019. As you can see here, net income has declined from 2016 to 2019, and then top here from 2019 to 2020 we have seen an 89% growth. This is good to see. that the net income growth rate is increasing from year to year. And I think we're going to see a 3-year from 2019, 2020 to 2021. We're going to see a positive net income growth rate, because I believe coming out of the pandemic, Hyrecar has been able to capture a bigger market, and more people have started just looking for their own gig jobs and trying to get vehicles. And I think Hyrecar has done well in advertising themselves. So because of that, I think for 2021 10 annual report, 10K, we're going to see a higher net income growth rate. So EPS basic loss rate from 2017 to 2020 slowed down. We may continue to see losses in EPS due to the young nature of the company. We're not really expecting the company to have a positive EPS anytime soon. My expectation is maybe EPS breaks even in the year 2025 or something like that. So from a high level perspective, maybe it'll show. The map isn't showing, but I think I don't see any major red flags in the net income for this company. I think they're doing just fine in the research and development expenses. I would like to see this not grow as fast, just because the gross income is such a small fraction. It's almost 3 times. Their operating expenses almost 3 times their gross income. So it's a little too much. They need to slow down this research development expenses and spend less money in operating expenses if possible. This may not slow down. The operating expense may not slow down just because the company is actually trying to do better when it comes to their taking care of the customers. When you call in, a lot of times customer service is really bad, so Hyrecar is trying to do better in the customer service area. They're moving a lot of people to that department and trying to do customer service much better than they are currently doing. I am not impressed with customer service, but hopefully in time they improve that area. And I know on the last earning call, they talked about how they're trying to improve this area, and I like that. It's very, very important. If the customers are not taken care of, Hyrecar is not going to have too many people returning. So I'm glad they're doing that. But they also, as they grow that department, they need to watch out and make sure they're not overspending in this area, which I think they kind of are. They kind of are. I know a lot of their revenue is just going into research development and stuff like that. They kind of are overspending in the operating expense. I think that could slow down. They need to watch out for that. But overall, honestly, it's not bad at all. So this is just a quick highlight, performance highlight for the income statement. So as you can see, this is the sale for Hyrecar, sales / revenue for year over year. As you can see, 2016, 17, 18, 16. Oh man. So series, yeah. So this is their 2016 revenue, gross 20. Sorry, this is the revenue for each year. So 16, 17, 18 sales revenue for 2020 revenue 9 million. Oh, I don't have 2015. I will work on this. This doesn't look too good. I'll work on this. I'm gonna hide it for now. But yeah, I hope this video helped. I hope you have gotten some kind of value from it. If I missed something that I don't that in here, please let me know, point it out. I would like to definitely improve this. And a lot of this data I got from Yahoo Finance. Um, so if you see that I'm missing something, just go ahead and let me know. I would like to definitely improve this information. Um, if they have a different outtake, let me know. If you think they're not spending enough. If you think they can spend more money in operating expenses, if you think they're not spending enough, also just let me know. I thank you for your time. Thanks for joining me. If you think that you want me to continue posting stuff like this, if it's insightful, let me know. I will continue to do this on top of everything else. Um, Thank you for joining me. Make sure you, if you look in the comments below, uh, you will see that I will post 3 links. One where you can park your cars for Hyrecar if you have multiple cars. If you need storage for anything, you can use that app called Neighbor to park your stuff. And also, if you have a car and you want to make passive income on Hyrecar, go ahead and use the link down there. Make extra income, and then also if you want to start driving for Hyrecar, rent cars on Hyrecar to make your money on the side. Also, there's a link for that down there. Thank you so much for joining me. Have a blessed day.